Happy everybody, and welcome back to the show, which is Mortgage Talk with Mark. And my name is Mark Hairston, and I own a company called Texas Mortgage Source, and have been for a long time doing home loans down here in Austin, Texas. And today we're going to talk about something that a lot of people have questions about, but not really a lot of people feel comfortable asking about, especially older people like myself. I'm 66 years old, so this is my generation I'm speaking to today, or maybe your parents' generation. But today we're going to be diving into reverse mortgages here in Texas. Now, before we go any further, I'd like you to just kind of take a deep breath. This is not a sales pitch. There's no pressure here. This is simply me having an honest conversation with you, just like I would with a neighbor sitting at my kitchen table, which I did last week. A friend of mine asked me about reverse mortgages. So we're going to talk about today, we're going to talk about who is a reverse mortgage maybe designed for, why people choose to get one, how they actually work without any kind of confusion jargon. We're going to make it very simple today. And we're going to talk a lot about the biggest myths and misunderstandings. And finally, the real pros and cons, because there's definitely pros and cons to the reverse mortgages. They've been around a long time, but not many people really understand how they work. And so by the end of the video, or by the end of the call today, we're going to be going to understand whether a reverse mortgage may make sense for you or your parents or somebody that you know, or whether something should be skipped completely. So let's get comfortable. Let's take this slow and easy. All right, let's start with the most important question. Who is an ideal reverse mortgage client? I've done several of these over the years, so there's all sorts of different types of people who may this work for, may not work for. But because reverse mortgages are not for everyone, that's for sure. They're not a one-size-fits-all deal. But when they do fit, they really fit. And here's who usually benefits the most. Homeowners have to be at least age 62 or older in Texas. That's a legal rule, and both parties have to be. So again, you must be 62 to qualify for what they call home equity conversion mortgage, or HECM. It's referred to as a HECM, which is the most common type. So it's typically for people who want to stay in their home. This is huge. As they age in place, as they say, that's a term that's very common. They age in place. So they don't want to go to a nursing home, or unless they have to, a retirement home. They want to stay in their home. And this is probably the biggest reason people typically are drawn to reverse mortgage, including myself. I don't have one personally, but I'm looking at this very seriously about in the future, my wife and I. And so, again, reverse mortgages aren't for people who plan to sell in a year or two. It's something you want to keep long term. Now, you may have to sell in a year or two, but that's not really designed for people that are going to sell. If you know you're going to sell in a year or two, I wouldn't even address this, because the cons are they can be kind of expensive. But again, they're for people who want to age in place safely and comfortably and with dignity, if you will. It may afford you some health care, home health care, things like that could get expensive down the road, assuming you want to stay at your home. And it's really for folks who have equity, but not always a lot of cash. So some people in my stage of life have a home maybe paid for in Austin, Texas. They could have equity, $500,000 or $1 million. But for whatever reason, they don't have a lot of cash on the sidelines. They may have some investments, obviously, some 401k or IRAs, maybe a pension. But maybe your home is paid off, or maybe you may have a small mortgage. Like we still have a small mortgage on one of the properties we own, but there's a lot of equity. So that's why we're looking at my wife and I. I say we, my wife and I. Either way, the equity is your biggest asset. And in Texas, equity is a little hard to get out of a property. You can do cash out refinances or HELOCs, which there's a place for those too. But a lot of seniors I know, and I know a lot of seniors, I live in sort of an area with a lot of seniors, they're house, what we call house rich and cash poor. A reverse mortgage is designed specifically for that situation. People on fixed incomes, maybe Social Security, maybe a pension from a company or state or agency, or maybe investments that you have, could be real estate investments or IRAs, whatever your situation is. And so reverse mortgages can eliminate monthly mortgage payments, which is really huge. It could free up hundreds or thousands of dollars each month. The property I have, we still have a mortgage on it. It's $2,200 a month for the mortgage itself. And with a reverse, I could wipe that mortgage payment out. I don't have to pay that anymore. I haven't decided to do that, but in the future I may. And so it's also really for people who want financial flexibility. Some people want a monthly check, or some people may want a line of credit or a lump sum. You can get a lump sum out of a property. I have a situation now where a couple, they've gotten divorced. They're both over 62 years old. They were married for a long time. And that's actually one of the main areas where people are getting divorced in their 60s. So we're starting to see a lot of this as well. But their property is paid off in Sun City. And the wife, the ex-wife, if you will, owes her ex-husband some money because of the equity. She can't qualify for a HELOC. She doesn't make enough money. But she does make enough money for a line of credit or a HECM loan as a reverse mortgage. So we're doing that right now where she's going to get her equity. She doesn't have to make a mortgage payment anymore. She wants to live there. He's already moved out, but he wants his money too. They don't want to sell the home. So this was a perfect solution for folks who may get divorced later in life, who have a home either paid for or, have a home that has a very small mortgage. And we got a lump sum for her so she could pay her ex-husband off. So reverse mortgage gives you lots of options. And here's a situation that comes around a lot, in the 60s or 70s or certainly 80s, where people have rising medical or living expenses. Let's face it, it doesn't get any cheaper. Life gets very expensive even as you get older. Unexpected reasons, could be repairs on a property they don't have the cash for. Could be lots of different reasons that there's certain expenses that people aren't ready for. And so nobody prints money faster, what I call the healthcare system. I remember when my mother passed away back in 2011, and she was in a retirement home or nursing home for about 4 or 5 years. And I bet we spent, $300,000 possibly. I can't remember the exact number, but it was a lot of money for healthcare. And a lot of families experience that. People are living longer, I should say. So a reverse mortgage can help fill those gaps without draining retirement accounts. You may have a retirement account, a lot of money, let's say an IRA, or let's say, an IRA after retirement from a 401k. And with the stock market doing real well, you don't want to draw down that money, but you may have enough equity where you can start using some of your equity in your homestead in order to supplement any retirement that you have. Our widows or widowers need stability. This is one of the most common and obviously most emotional scenarios that I ever see. And that kind of brings me to a story I want to share with you, because I worked with a wonderful woman up in Temple. I live down here in Austin, and we'll just call her Linda. And her husband had passed away unexpectedly. He died of a heart attack, or maybe it was a stroke. I can't remember, but he had passed away suddenly. And he handled all the finances. I mean, he was the guy that handled their finances. And she suddenly found herself living on only half her income, but with full mortgage, full taxes, full insurance, full everything, even a fairly healthy HOA. And she was referred to me to get a reverse mortgage. She said, "Mark, I really want to stay in my home. I'm not ready to leave the place that we built together about 30 years ago." She'd been there a long time, but they had done a cash out refinance several years ago. So she had a small mortgage, but she couldn't really afford the payments anymore with her salary and her small pension. So we looked at the reverse mortgage as a solution. And after running the numbers, we realized she could do several things. She could eliminate her monthly mortgage payment completely, so she wouldn't have a mortgage payment. She still has to pay her taxes and insurance. We'll talk about that in a little while. She could stay in her home as long as she wanted. Okay, we're going to talk about the myths around that too. Some people think they're going to lose their home. No, as long as you pay your tax and insurance, you stay in that properties forever, until you need to move or pass away. And they'll have a safety net line of credit for future expenses. In this case, she would have about $100,000, what we call LOC, or line of credit, that she could tap down the road if she needed to. And that line of credit grows over time at whatever rate that the mortgage is at. Let's say 6% today. That line of credit goes up each year. So the longer she stays there, if she doesn't tap her equity, it goes higher and higher. If she doesn't tap her line of credit, it goes higher and higher. And still leave the home to her daughter down the road. Okay, she doesn't lose title. The title stays in her name as a sole owner. And she was very relieved. She was so excited that this opportunity came around, that this program was even around. That was the original intent for it years ago. For her, it wasn't just about the money. It was about her dignity, that she could stay in her home that they had built and all her memories that they had over the years. And and she could breathe again a little bit. So reverse mortgages aren't about getting money from your house. They're more about what I would call stability. Now, money's part of that stability, but I think deep down, that's what people are looking for is emotional, psychological, and financial stability. So let's talk about why somebody actually gets these things in the first place. There's several reasons, and they're usually not random decisions. They're real life reasons. And a lot of times these loans take a lot of counseling and consulting and take a long time to close because people, it's a big decision. Any mortgage is a big decision, but a reverse mortgage for a lot of folks as they age is a real big one. Number one reason is eliminating monthly mortgage payments. We've talked about this just a minute ago. This is probably by far the biggest reason. Imagine retiring and instantly gaining back $1,200 a month or $1,700 a month or even $2,500 a month, depending on your age. It's all calculated on your age and equity. And so that could really change people's lives. Number two reason would be creating monthly income. Some seniors are using a reverse mortgage to generate a monthly check, kind of like supplementing Social Security. Most seniors like myself, I haven't taken Social Security, but I will this year, or I'm sorry, in 2026. And I'm not ready to retire, but down the road, I may have a reverse mortgage to help my wife supplement our income. Emergency savings, reverse mortgage line of credit grows, like we said, grows over time. And this is one of the coolest features most people don't even know about. They know about the line of credit, but they don't realize how it goes up every year, typically 5 to 6%, depending on how much you're going to receive when you refinance your property into reverse. So again, the line of credit increases, giving borrowers more borrowing power every year. Number four, and we see this a lot, is covering healthcare or long-term care. We talked about rising costs, medical bills, even food. I mean, let's face it. I mean, it's very expensive these days to live. Home health aides, medications, costs seem to keep climbing. A reverse mortgage can give you some breathing room there too. Number five would be, we talked about this, aging in place. This is a big emotional one. People want to stay in their homes. Unless they have to move to assisted living, most people want to stay in their home unless it's just not suitable. If you have a 2-story home and the master's upstairs, that may not be a good reason to stay in your home as you age. So you may want to sell the property and buy something else. And you can actually buy properties using reverse mortgage. I helped a client not long ago. He had sold a house in Dallas. He was moving down here to be closer to his family. And he had about, $300,000 worth of, from his equity from his property sold. And he was able to put that money down on a reverse mortgage and buy a property for about $500,000 and never have to make a mortgage payment on that property. And he was only, I think, 72 at the time. So he had a long way to go. Number six reason would be protecting your retirement accounts. We talked about that. If you've got a bunch of money in an IRA currently, when the stock market's doing real well, you may not want to take that money out right away. So some seniors, even people with a lot of money, use reverse mortgage strategically to avoid pulling down, I should say, investments during market downturns. If the market were to shift, they don't want to take that money out. They want to ride the market back up. Reasons number seven could be, helping your family. Believe it or not, many seniors use reverse mortgage to help a child buy a home. Maybe their son or daughter's in their 30s and they have enough equity, they can pull that out and not touch that and basically give them some of their inheritance up front. So they can also buy a home or pay for the grandkids' college or assist with any kind of family emergencies. And reason number 8 really, again, is enjoying life. People are living longer and they want to be able to experience different things like travel, or maybe you have a hobby. It could be to get a new car, update the home, you name it. People want freedom and not fear. And sometimes money causes a lot of fear, or lack of money, I should say. So let's kind of talk about how you actually qualify. Reverse mortgages are much simpler than traditional loans. They really are. I do what they call forward loans, have been for 40 years, where it's a harder thing to qualify for because we're going to look at your income, your job history, your credit, and things like that. Some of that we're going to also appeal to underwriting reverse mortgage, but not the same. Primarily, we're going to talk about your age. Again, you must be 62 or older, and primarily your home equity. The more equity you have, the better the loan terms you're going to get. When I say loan terms, it's kind of like an actuarial chart on a life insurance program, except because they're going to look at your age versus what your equity position is, how much they can borrow, how much you can borrow based on your age and how much equity. And it also must be your primary residence. They don't have this program, I don't think, in any state, but certainly not in Texas, for investment properties. You have to have this designated as your homestead in Texas, in the state of Texas. Number two, you have to be the ability to pay taxes and insurance. So you don't necessarily need a certain amount of money to qualify, but lenders check that you can handle the property taxes, insurance, and basic upkeep of the property. And those things are going to need to meet for a loan approval. They also are going to look at your credit, but it's not as a big deal as long as you have enough income through other sources to handle tax and insurance. You can also allow the lender, it's called, to collect enough money each year to pay those tax and insurance yourself. It'll come out of your line of credit. So this is a requirement, but not to talk you in or out of anything, but just make sure you understand the program. So you can't have a lot of massive debt or recent foreclosure. So sometimes people can't qualify. They've just gone through not a foreclosure, but even a bankruptcy may take them out of this. So there are some underwriting guidelines, but not nearly as extreme as going through a normal mortgage process, through a HELOC or a traditional mortgage, cash out refinance. So we will look at your credit. Doesn't have to be perfect, but it has to be reasonable. And that's really about it. Reverse mortgages are primarily based on your age, value, home value, and your equity. And so this is probably to say the most important part of this talk today, because there's a lot of myths around reverse mortgages than any loan I've ever seen. There's a lot of scare tactics almost in the marketplace. A lot of financial planners don't really understand how they work, so they scare people away from them. So let's kind of talk about some of the big ones. Myth number one is the bank takes your home. And that's absolutely not true. The bank doesn't take title to your property. They don't own your home. You own your home just like you do today. If you got closed on reverse mortgage tomorrow, you would still own. You may remain the owner. You stay on title. You can sell the property anytime you want. You can refinance the property. That's another solution for you anytime you want. You can leave the property to your children in a will. So again, that's myth number one, that you're going to lose your property. That's not true. Myth number two is my kids are going to get stuck with the debt. And that won't happen either. Reverse mortgages are what they call non-recourse loans. This means that your kids will never inherit the debt. Now, when I say that, they may inherit the property, but they can sell the property and get whatever's equity is left in the home. If you owe more, if the loan is higher than the property's worth when you pass away, then it goes back to the lender. The kids never are going to inherit the debt or the difference between the property's value and how much is owned. So that's huge too. People don't realize that. They think that if the loan amount after, let's say, 20 years is higher than the property's value, that they're going to have to pay that. That's not true. Your heirs can simply walk away if the home is what we call underwater, which is not true in any other mortgage. Any other mortgage, they're not you're liable to pay that mortgage back, even if the property's underwater. So this is one huge advantage of a reverse mortgage over any other type of loan out there. Another myth is reverse mortgages are only for broke people, that people who really need the money. Now, that's part of it, but that's simply not true. I've helped a friend of mine is worth several $1 million. He's a physician, retired doctor of mine, friend of mine. His home's worth about $2.5 million free and clear. He's got lots of other money, but he saw there was a reason that he could get a nice line of credit to buy some investment properties, or just, have access to cash that he may want to keep, and they're going to stay there in that home for a long time, maybe forever. So he saw the advantage of reverse mortgage as a line of credit. He doesn't need the money, but it's nice to have on the sideline that the line of credit will continue to gain value as they stay in their property. Number four myth, which is very common: you can lose your home. And it's true, you can lose your home, but only if you fail to pay the taxes or the insurance or the HOA. Just like any other mortgage, you have to pay the taxes, home insurance, and your HOA, or they can file a lien or take your property. So that's true as well. And another myth that you can't leave anything to your kids, and that's false as well. I had a client who had a reverse mortgage for about 5 years. He passed away. He did have a debt there, but the property is worth about half what he owed. So the kids got the balance of it. So again, if your home is worth more than the loan balance, your heirs keep the equity. So reverse mortgages are too expensive. That's another myth. Now they do have cost, and compared to some loans, they do have a little more cost than others because it's an FH insured loan. and there are some fees to pay. But it's not the same. If you had to sell that home, you're going to be paying 8 to 10% of the value to sell the property from realtor commissions or closing costs or title policies. In this case, you're refinancing, so there are some fees to it, but they're no more than you would pay if you're going to have to sell that house. And so number 7 is myth is I'm going to be kicked out when I turn 90. Some people think that. I'm not sure where that came from, but I've heard that on several occasions. Maybe that's something they read years ago. But that you can stay in the house as long as you can. You could be 100, and still be living in that home in a reverse mortgage. I have a friend of mine, a mortgage broker in California. She has a client who's had a reverse mortgage for 25 years, never made a mortgage payment in 25 years, and she still lives there. So again, you can stay as long as you live in the property. If you move now, if you were to move from the property, let's say to live with a son or daughter, the property, you cannot rent the property out. If they find that out, and they will find that out most likely, is they're going to call the note due. If you leave the property after 1 year, they could call the note. So that's another reason you have to live in that property and maintain the property. But age is not a factor for eviction. You can stay as long as you want. One last story. I had this retired couple from Georgetown, and we'll call him Tom. And they reached out to me. They had a beautiful home, but they were living on a fixed income. They didn't want to sell. They didn't want to move. They didn't want to be burdened to their kids. And so we looked at the reverse mortgage as an option because it was free and clear. With it, they were able to pay out. In this case, they had about $100,000. They owed about $100,000. The property was worth about $800,000. So we were able to pay off their existing mortgage, remove their monthly mortgage payments, and their line of credit for emergencies kept going higher. So now they have about a $300,000 line of credit, and they kept ownership. They're going to stay in their home. And their daughter told me, she was probably in her early 40s, mid 40s. She says, Mark, this has really given my parents, peace of mind they hadn't had for years, because they were concerned about outliving their income, outliving their assets. For them, it wasn't just about the cash; it was about freedom. So let's wrap up with the pros and cons. So the pros are no monthly mortgage payments. We talked about that, but that's huge. A senior living on a fixed income, if you can let them stay in that property with no mortgage payments, that's a really big relief. Again, stay in your home as long as you want. Access to tax-free cash. That's the other thing. If you draw on retirement programs, those are taxable assets, or Social Security even is taxable asset. So with your equity, it's tax-free. So if you were to draw, $50,000 1 year from your equity, you don't pay tax on that money. And you don't have to draw anything. If you have enough assets or otherwise, or your cost of living is reasonable, you don't have to take the money, but it's available to you. But when you do, it's tax-free. And again, it's very flexible. You can take a lump sum, you could take a monthly income, or again, this line of credit. You remain the owner. The heirs are protected. So if the property is in the estate, if the loan is higher, loan is worth more than the property, the heirs are not obligated to pay that debt. Counseling, you do have to go through a counseling service before you can close, to ensure clarity. Just because you're talking to a mortgage broker, make sure that you have to go through a counseling session for clarity, to answer all your questions. It's about a 6-month close generally when I start talking to people about a reverse mortgage. So, and again, it's a great option for fixed income seniors, which a lot of seniors are on a fixed income. So the cons, of fees can be higher than traditional loans. In traditional loans, we have a certain set of closing costs. It could be several $1,000s. It could be much higher than that, even on a reverse mortgage, for a variety of reasons we can talk about offline. Again, it's not really a con, but you must keep up taxes and insurance. You can't just let those things lapse. Reduces equity you leave behind, obviously, because the loan, if you don't make a payment, you actually have an option to make a payment on the loan. You don't have to let it continue to grow, but the loan keeps going up. Obviously, your equity will be reduced down the road. It's not ideal if you plan to move soon. We talked about at the very beginning. If you're planning on moving in 2 or 3, 4 years, it's probably not the best solution, because there are the cost up front. So reverse mortgages are just tools, and tools must be used correctly. That's why every situation is different. Every client I've ever had over 40 years is different. And this may or may not be a solution for you. So is it right for everyone? No. Does it help a lot of seniors live safer and calmer, more financially secure? It absolutely does. So again, my job is to sell you something like this, is to educate you, to give you the truth and clarity and the options, because it may be a good solution for you. So if you're curious about whether reverse mortgage can help you or someone else, a family member, or it could be, a parent or uncles or aunts or anybody else that you may know in the marketplace that has equity, over 62 years old, and may need some assistance with some additional income or lines of credit, give me a call. We'll walk through it just like we walk through any loan. This takes a little more time, and we'll take as much time as they need or you need to make sure this program may work for you. There's a lot of information online about these, a lot of videos on YouTube that you could look at, or other things you could research. But if you want some hand holding, give me a call. And we appreciate you, talking about this. So that's the program for today. Reverse mortgages are a very important subject as these what's called baby boomers are starting to age, like myself. There's 10,000 people a day turning 62 in this country. And so that leaves a lot of opportunity for this program to grow. Only about 1% of people who qualify for reverse actually have one. So again, if I can help you anyway, do the research on this or answer any questions, give me a call back at 512-789-6967. Till then.